and they've been for sale with a 50% return on investment. Now that's a pretty damn good return, but the return is there because there's a lack of lenders and the lenders are charging more, and there's also expectation that some of those retailers are going to exit. So you need to have good strategies to be able to repurpose those buildings or re-tenant them.
Lending on UK commercial property is at a 10-year low. It's fallen by 33%, according to research by Bayes Business School. So what does all this mean for commercial property investors, and what opportunities does all this present for savvy property entrepreneurs? We're going to deep dive into all of this in this video.
But before we deep dive in, why don't you come and join Ranjan and I at the Baker Street Property Meet, the UK's #1 event with over 300 property investors every month. We have the best keynote talks from across the industry, and you can always join us in the bar at the end and ask us your questions.
If you haven't been, why not? Join us at Baker Street Property Meet, get your tickets and find out more info at bakerstreetpropertymeet.com. See you guys there. Now, on this channel, we're very fascinated by commercial property, and when you buy property, of course, you want to get a loan on it, and it's a little bit distressing to find that commercial lenders have less appetite for commercial property lending, and this is proven by new research which says that commercial lending in the UK is at an at a 10-year low. It's fallen 33%. Andrew, what do you make of all this? What are the reasons for all of this?
Statistics and damn statistics is what I say. Let's take a look at this. It's at a 10-year low. When we look at the asset prices have fallen significantly because commercial property, if it's an office building that's become vacant, it's worth less than it was when it was tenanted. Commercial buildings are based upon the value of the lease and the strength of the covenant. Now, if it's a vacant building and post-COVID there's been a lot and shops have also exited, then the buildings have fallen in price, and some buildings have actually fallen 60% in price. So if lending's only down 33%, that is one of the reasons the lending is down, is because the asset values are down, so less money needs to be lent to borrow.
Yes, and also the outstanding debt is at its lowest level. The outstanding commercial debt that lenders have is at 170 billion in 2023, lowest level since 2017. And I think partially this is because commercial lending, the loan to values are lower than residential anyway.
Absolutely.
And also every 3 to 5 years the lender has the option of having the properties revalued, so that the amount being lent can be adjusted.
That's right, and if you're outside of your covenant, expect to be asked to put some money back in the bank or to exit that property deal that you've got. What is interesting, and what I'm seeing on the ground, is commercial lending rates are just nudging up a little bit. And the reason they're nudging up a little bit is there's actually fewer lenders out there as well. So not only is the sector slightly out of vogue if you want to keep commercial as commercial, but also there's fewer lenders and they're charging a premium for lending. I mean, in one particular sector, the secondary retail assets, there's only 10 lenders in the marketplace lending money. So there's not a lot of competition there.
But what are the opportunities for savvy commercial property investors? If you're new to this channel, don't go away without subscribing. Put out new videos every week, you'll stay informed, and also comment below. Now, I think one of the opportunities that we talk about a lot is, of course, residential conversion. Now, you talked about shops, for example. There are many shops that are out there where it's the whole building that is being sold. So it might be a 3-story building with a shop on the bottom. If you were to convert the upper floors to residential and maybe the back of the shop into a flat, then you can refinance most of it on residential remortgages and just leave the shop unencumbered.
You certainly could do that, and you could also, to put that a little bit further, sell the shop into your SAS pension fund, extracting the cash that you've got locked up in that SAS and generating the returns tax-free within that wrapper. So there's various things you can do. I mean, I sort of look at this and say to myself, I think you need better margins, better yields on these properties. And if we were to look through the auction catalogues, as we've done before, and we've picked on a few where whole shopping centres have been for sale, and they've been for sale with a 50% return on investment. Now that's a pretty damn good return. But the return is there because there's a lack of lenders, and the lenders are charging more, and there's also expectation that some of those retailers are going to exit. So you need to have good strategies to be able to repurpose those buildings or re-tenant them. And there are ways to do that. Follow us for more future videos on that topic.
As Andrew said, there's a lot of shopping centres, particularly in northern England, Wales and all of that, which are being sold at eye-wateringly attractive yields,
yeah.
50, 60%. But I think the big problem with shopping centres is that it's very difficult to repurpose them. And from a lender's point of view, they've got a lot of stuff to look at. If you've got 30, 40 tenants in a shopping centre, you've got to look at every one of those leases. And often the owner is selling out because a lot of the leases are coming to an end and there's no sign that they're going to renew. And the other thing with shopping centres is, which I think is why the yields are so high, not just the lack of lender interest for the reasons I said, but there's also limited break-up value. I think you'll find a different proposition if you were looking at, say, a parade of shops, an unbroken parade of shops in a high street or secondary parade, because one, you got repurposability, and one, you got break-up.
Yeah. I mean, with all of these things, it's about knowing your property strategies and understanding how to actually add maximum value to a site or sites that you're operating. And also, as with the parade of shops, if you're the landlord operating several, for argument's sake, a rent review on one store ripples through to the other stores when you come to the rent reviews, because the valuers are looking at comparables here. So it can help you if you own the whole parade of shops.
So with commercial property, I mean, just to bring out some of the strategies that we're talking about, with commercial property, lenders really don't have the appetite right now, and where they do, the rates seem to be very, very high. So you either need to be looking at a repurposing angle, a repurposing to residential, or if you're repurposing to other commercial, have a tenant in mind who wants to take up that space. You would fund that with a bridging loan, a short-term loan, and once the property is converted or rented out or whatever, then you would put that to more long-term lending when the banks have some surety. And the other thing is, if you have cash, particularly if you have cash in a SAS pension, the right home for those SAS funds could be commercial property that's let out to a good tenant with 5 or more years on the lease. Now, we've been seeing some of these show up and sell with yields of more than 10%, 15% in some cases.
Well, that is not unrealistic in this current marketplace. And, to sort of look at yields, it's partially linked to interest rates. But if you can lock in an acquisition on a good double digit, such as 12, 15%, then as asset values change and interest rates fall, the value of that property will go up for you.
And one thing that I've found actually with our own portfolios is that where you've got mixed-use properties, commercial properties with residentials above, or they're just mixed in general, actually the asset is stronger, because if the commercial asset has fallen in value because of interest rates, that's usually compensated by the rise in value of the residential assets. So there is no call by the lender to inject capital into the property. And this is one of the reasons why commercial properties are being sold. The lenders are revaluing the properties every few years, and they're saying, look, it's not worth as much, put some money in or sell.
Absolutely. And I think one of the other things I see with lenders is if it's a mixed use property, you've diversified away their risk. And I think that was the point you were trying to make there about not being asked to step inside a covenant, because one half of the market might be up, the other half might be down, but it's actually a neutral transaction. So from that point of view, lenders do prefer the mixed use to just either solely commercial or a whole block of residential. And it gives them diversification, a bit like a sun hat and an umbrella.
So if you're dabbling into commercial property, my recommendation is make sure, if you're doing commercial for commercial sake, then make sure there is strong rental demand for the type of property that you're buying. And even if it's tenanted, make sure that if that tenant were to go bust or whatever, there's an alternative tenant looking to pay the same rent for that particular unit in that area. And I wouldn't do any commercial property investment if there wasn't a plan B. And the plan B would be that it's repurposable using permitted development rights if the tenant were to move out and it was to become vacant.
So, if you've not already got that ticket for the Baker Street Property Meet, then why not? Because we're almost sold out once again. 300 people every month join us at the bakerstreetpropertymeet.com, where you can get your tickets. Ranjan and I will give you a great keynote talk. We'll have guest experts and we'll answer your questions live on a panel.
So, although commercial lending is at its lowest in 10 years, Baker Street attendances are at their highest in 10 years. So join us this month. The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.